Hey everyone, welcome back. Now in this video, we're going to be talking about Killzones and we're going to be talking about time. Now these are very important in terms of like trading, because a lot of people like think trading is like 24/7 because like the futures market is literally open like all but like I think 22 hours a day or 21 hours a day. But you need to realize that like there's only a couple of hours each day that provide actual like moves, right? And that's the hardest part about trading. That's when people talk about 90% of it is waiting, like that's part of what they mean, right? So for me, it shortens even more because I only trade the New York AM session. Okay, so I really only have 2.5, 3 hours to catch a trade. However, I trade oil, gold, ES, and NQ, but yeah. So first you need to understand like what each kill zone is known for, right? And if price is fractal, okay, then I like to think of Asia session as Mondays, okay? Now, Asia usually provides a small range, right? Like Mondays. Why Mondays? Because Mondays usually have no news and it's the first day after the weekend, and price just usually likes to just chill or start to set the low or the high of the week, okay? Now, London, for example, a lot of times likes to manipulate lower or higher depending on if we're bullish or bearish or not. And sometimes in New York we'll move lower as well, and then we'll, like if we have like an 8:30 or 9:30 open, we'll have like a another run lower, and then we start to move higher because it likes to trap people thinking, hey, we've been short bias all day, we're going to continue short. Wrong, and then we move higher. So small range in Asia, and that is usually from 8 p.m. to midnight Eastern time. And then London is from 2 a.m. to 5 a.m. Eastern time. And then people are like confused on New York. I think it's like 8:30 to 11:30. Some people say 7:30 to 10:30, whatever, right? As long as you got like the New York stock exchange open in there, I think your answer is fine. And you give yourself like 3 hours. Like it's different for index and forex, but that's kind of like how I go off of it. So now London, I treat that like London and like the early parts of New York, I like to treat it like Tuesday, Wednesday, a price action. Okay. Now, in classic buy weeks, for example, London, a Tuesday or Wednesday sets the low high of the week. Okay. So in this example right here, London is starting, and parts of New York are starting to set like the low of the day. Okay, so think of this. This is the interbank price delivery algorithm. This is how price moves, right? It's consolidation. So we had consolidation here, expansion lower. Now, people, you don't just go into consolidation after that. We have expansion, and then what we'll either have is either retracement, okay, like this, or we will have a complete reversal. Now, with this, it all depends on your bias, right? If you're aligning the time frames properly, and we'll be getting into that later on, you will start to find like the right side of the market to be on, okay? Doesn't mean you're always going to be profitable, doesn't mean you're always going to be right, but you will more times than not most likely be on the right side of the market if you're using everything in my bootcamp I'm about to talk about. But specifically, think of this: consolidation, expansion, retracement, or reversal. Okay. Now, you have to wait for this to happen. What I mean by that is like, if you're like a range high or a range low, like all-time highs or all-time lows, this is where this really comes into play and can help you make some money. Because when most people, let's just say this is all-time highs right here. All right. So we'd be consolidating. We just have big move up, and everyone's trying to either catch longs or short down back into like discount of the range, right? Whereas you're waiting for consolidation, and then you wait for manipulation to happen, and then you start to play the move down if you want to, or you can play the real move, which I find higher probability is the move up. Okay, you may have to wait a little bit longer for it, but you know it does happen. So consolidation, expansion, so expansion down, and then either retracement or reversal, and then you'll have consolidation again. All right, so this was actually yesterday. I'm going to show you guys two examples. So this was yesterday. This is the hourly time frame. So I had an hourly FEG marked off right here. And I'm bullish on the day because we had a good shift to the upside. Now we're having a pullback, all right? Now for me, a couple things I want to happen. I want to see like my entry model present itself. I'll kind of give you guys a little sneak peek here. So right here, I have my breaker. I hear the top of here, or unicorn, and then I had a short-term stop run right here. So price ran out the early longs based off of this candle right here. This is just, when I saw this candle, I'm like, oh, they're about to get trapped and we're about to go lower. Okay. Now, this is also called a New York reversal, which I'm about to get into right now. Let me just copy this image over. So you guys got that. These are also in my free Discord under the resources guide. So check that out and download it if you want to. I copy this over now. So this right here is called the London swing to New York open or London close reversal. Okay, London close is right around 10 a.m. for during New York. So this is also called like New York reversal. Okay, so New York's gonna reverse up and take out Asia highs. So I was going into New York open. I'm like, okay, these untapped highs right here, and we're working from an hourly BISI. Yeah, I'm definitely gonna be bullish here because I got so many things lined up in my favor. All right, so now I want to see displacement through here. So I got a nice move here, and then I'll set my limits right here once we get that close right above here and target just 2R. Boom, you tagged in there. So actually I need a fair value gap to form. So I would have liked this candle to make a low and then push higher, but either way it did. So look at that. So this right here is the London swing to New York open. These are all one. This is all one template, by the way. It's just a bearish and bullish version. So look what happened here. Mid high, a lower low, and then we also had SMT here as well. So this thing right here doesn't point out the SMT. All right, so you want SMT there, and which we had. We had SMT. And then we also had an SMT inside this gap. All right, so that is the number one A+ setup for me. Okay, one setup for life, whatever you want to call it. That's it. Okay, untapped Asia highs, and I'm bullish. Untapped Asia lows, and I'm bearish. Working from a 1 hour PD array. All right. Now, doesn't mean if I don't get those, I won't trade. So I would not pay attention a whole lot to these three. These are also in my Discord. I wouldn't pay attention to these, well, two. This one right here, it can save you a lot because, like, if you have London take Asia highs and lows like this, like, oh, let me change this color. Like that, and like it just keeps going aggressively. Odds are that, you know, New York is probably going to be pretty choppy as well because all the liquidity has been raided. So I've seen those days so many times that like I know what I'm going to get. So I pay attention to this one, cancel out these two, and then this is like usually you'll get this around like non-farm payroll. Okay, so like 8:30 open is like right here, and then we have a move lower, right, and then like from there we'll have like a move higher. Okay, so like a lot of times like news is the manipulation. Same thing here. So news and manipulation, and then we go and tack that news low or whatever, or the consolidation lows. So this is a good one. And then this was the one I just showed right here. This is the New York reversal. And then we also have a classic buy day or sell day. Now, for classic buy or sell day is usually when you get London sets the lower higher day. Okay, so if we were bullish here, right, and London set the low here, we would have wanted like New York to start, early parts of New York to start trending up. And then like we would have got we basically just would have played the retracement in New York, right? So if I go back to this chart, that's how this works, right? So think of it, consolidation, expansion, and then either a retracement or a reversal. If we have a retracement, that is a classic buy day or sell day, okay? A reversal is a classic New York reversal, okay? Those are the two like most high probability profiles you can find. And then of course the third one is the consolidation upon news release, and the fourth one is the seek and destroy profile, which, you know, just takes the highs and lows, and then just not a whole lot of fair value gaps. That's another thing too. So with seek and destroy, you're not gonna have a whole lot of fair value gaps in there. And that is, people think, like I don't need fair value gaps all the time, but like just drop down to like the hourly time frame. And if you don't have a whole lot of if the candle isn't moving very much, then odds are like this one, like this is moving like a good bit. That it means I'm gonna have some fair value gaps in here. Whereas something like this, so this is Asia right here. Let's just say I'm expecting price to go lower, and I see this candle like moving like this for a whole hour. Like I'll watch the hourly time frame a lot of times, just that, until price hits my point of interest. And I see this, I'm like, okay, this is not doing anything. I can look at the 5-minute chart based off the hourly and tell you what it's doing. It's not doing anything. It's chopping. It hasn't moved at all. Well, it's moved up, I mean down and up, but like it hasn't, you know, done anything at all. So, and look at the lack of like displacement here. Look at there's not one fair value gap. Well, there's one fair value gap in here. All right. So displacement and with fair value gaps will tell you whether or not it's a seek and destroy condition. Seek and destroy conditions are very low probability. I recommend not trading unless you're a scalper, and if you do want to trade them, trade it with light size. You'll typically see these days before big news events such as CPI, FOMC, NFP, or like FOMC, the PM session, like the AM session will consolidate. That's when you'll see those. Classic buy days and sell days, you'll see those usually in the middle parts of the week when the weekly range is forming. So like Tuesday through Thursday. And then New York reversals, same thing. A lot of times you'll see those like Tuesday, Wednesday, because the low of the week or the high of the week's being set in. And it's in the process of being set in, so you may catch like the reversal. But mainly the middle parts of the week, Tuesday through Thursday, and sometimes Friday. Friday can be a lot of times like the start of the, remember what I said here? So consolidation, expansion, retracement, reversal, Tuesday through Thursday. And then we'll have that start of that consolidation, or it may come back into the range a little bit, which is sometimes you get like a TGIF. Sometimes there's a setup. But Fridays are okay sometimes, but not really. Usually not a whole lot of news outside of NFP on Fridays. And sometimes like PMI. But the good thing to know, how do you know if the weekly range is capped, is if there is the higher time frame draw and liquidity is met. So if you're looking for a weekly FVG to get hit and it gets hit like Thursday afternoon, odds are Friday isn't going to do much. Okay? I don't want to get too much into that, but like that's kind of how we use like Killzones and time. I kind of touched on weekly profiles a little bit in this video too, but just think of price as fractal. So that's the best way to use it. And then honestly, just go on my Discord, links in the bio, links in the description, and just check out these resources and guides and just download them to your computer or print them out, whatever. They really do wonders. This is done like Lord's work in terms of my trading. So check those out. And anyway, that'll do it here. I'll see you guys back here on the next video.